Gold just tested all-time highs again on Friday. Everyone is celebrating, everyone is calling QE is back, everyone is screaming money printing. But what if I tell you, insiders sold gold first, news came after market close, and Monday's open could redefine the next 3 months? If you trade gold and you don't understand what happened between Friday close and Monday open, you are already late. Let's keep it simple. Every time the Federal Reserve prints money, they give it a new fancy name: QE, liquidity support, balance sheet tools, temporary facilities. Ordinary people don't understand it, but traders do. This is money printing, period. And yes, last Friday, something very important started again. The Fed quietly reintroduced QE-style liquidity, and gold reacted immediately. But here's where it gets dangerous: insider selling before the news. Look at the H1 chart. Gold tests major resistance. Suddenly, a vertical dump, almost $100 intraday, then a weak retracement. Market closes below Friday's high, and only after the market closed, bam, the news becomes public. This is not retail behavior. This is not panic. This is insider positioning. They sold gold before you even knew why. Why Friday plus Monday equals one candle? I always say this: Friday and Monday are one trading unit, because big news drops after Friday close, market gaps on Monday, sentiment resets, price action gets redefined. And this weekend was special, very special. The real bomb: new Fed chair risk. Everyone is focused on QE, but the market is actually scared of something else: Kevin Warsh. If Kevin Warsh becomes the next Fed chair in 2026, this is what you need to understand. He has a strong hawkish history. He has always been against QE. He is anti-money printing. He supports a strong dollar. He is bad for bonds and very bad for gold. That's why insiders sold gold first. QE might be temporary, but a hawkish Fed chair is a long-term shift. Why gold failed at resistance? Let's be technical for a moment. Price tested major resistance, formed a big rejection wick, failed to close strong, dumped aggressively, closed weak before the weekend. This was not a breakout. This was a distribution zone. Key levels you must watch: 4,250 equals key support, static support near 4,250, dynamic trendline support below. If price holds above, sideways continuation, breaks below, trend failure. A daily close below the trend line equals alert: year-end profit taking has started. Why timing is against gold. For now, never ignore the calendar. Last 15 days of December, end of Q4, end of 2025. Gold already up 60%, silver up 100%. This is the perfect environment for profit taking. Also, India's wedding season demand is almost over. Physical buying slows down. Paper selling increases. This week will decide everything. This is not a normal week. We have PIN, NFP, Tuesday, December 16th. PIN, CPI, Thursday, December 18th. PIN, Bank of Japan policy decision. 3 landmines, and now listen carefully. Scenarios for gold. Bearish for gold if NFP comes strong, CPI comes hot, Kevin Warsh confirmation strengthens, BOJ tightens indirectly. Then dollar strengthens, bonds suffer, gold stays trapped or dumps. Bullish for gold only if NFP is very weak, CPI is very weak. Market starts pricing more than one rate cut for 2026. Without this, no real breakout. Big picture, don't fall for the QE trap. Yes, QE started again, but it may be temporary, just like 2019, just like fake pumps before 100% retracements. We already completed a 5th impulsive wave. Now the market is asking, is this trend still alive, or is distribution complete? Final thought: what am I watching? 4,250 support, daily close versus trendline, NFP plus CPI reaction, Fed chair clarity before next FOMC, dollar strength versus gold sentiment. Until then, sideways to corrective price action is more likely. A real breakout needs very weak data. If you want real macro analysis, insider-style price action, no indicators, no hype, just pure market truth, subscribe, like, and comment gold if you're trading XAUUSD this week, because this week will not forgive emotional traders.